How you doing? I'm Aristotle, and I'm going to be teaching you guys how to option trade step by step using Robinhood and Tastyworks. But first, we got to go over a few things. First thing first, you should buy my book. It's going to teach you guys my strategies. It's going to teach you guys how to use patterns. It's going to teach you guys pivot points, everything that I use pretty much. We are primarily an option trading group. We like to scalp, we like to day trade, and we like to swing trade. We are very good at swing trading. We are very good at scalping and day trading. We don't hold position trades though, but we will in the future because of the volatility of the market and the uncertainty of the market. We can't really hold any positions currently. But we do swing trade, which is essentially our way of holding positions. So scalps are positions open and close within seconds or minutes. Day trades, opens and close trades in a single day. Swing trading is pretty much holding a trade overnight, a contract overnight. So when we scalp, we are essentially trying to get quick profits, quick gains. Or when we're day trading, we're trying to benefit off the trend of that day. And if we're swing trading, we're trying to pretty much catch a long-term uptrend, maybe a week to some days long. So my preferred method of trading is I use Robinhood for swing trades only. Tastyworks can be used for swing trading, day trading, and scalping. But because of the psychology of being able to close at will, I like to swing trade on Robinhood to essentially discipline myself because Robinhood has a 3-day trading limit. So I like to, one more time, use Robinhood for swing trades, Tastyworks for day trading and scalping. So trades are usually in this format. I'll list the stock, I'll list the type of option, I'll list the expiration date, and I'll list the strike. So the stock, I'll put the name of the stock. The type of option, it'll be a call or a put. Expiration, the day the contract expires, and the strike, the price you select to execute an option trade. Bam. So, how to buy and sell step by step. So, let's just say I want to do a call on Roku, right? So, it would say trade, and I would go to trade options, and then I would select a date. So, let's just say I want to do March 8th, right? And I was bullish on Roku, and I was betting on Roku to go up. So, Roku share price right now is 64.4, right? So bam, that's where you see the share price. So remember, if I'm doing a call option, I'm betting on the stock to go up. So I usually do 1 to 2 spaces above the share price. So if I'm very bullish on Roku, I would probably do 65 strike. So these numbers right here are your strike prices, right? And that's the number you believe that the stock will hit. But because I'm doing a call option, I want these two to be my strikes because I believe it's going to go up, right? You always buy 1 to 2 spaces above your share price for a call option. So remember, we're doing a call option. We're buying a call option with an expiration of March 8th, and we're buying Roku. So bam, I'm going to do 65 call, and I'm going to click that 2.43. So that would be our limit. That is what we're able to buy the stock for. And the limit is usually set halfway between the spread. So bam, I clicked on that 2.43. So let's get right into it. This right here is your spread, aka your limit prices. The lowest number on your spread, so this number is called your bid price. This number is called your ask price. So you always buy near the ask whenever you're trying to execute a call option. So I would want to buy one contract, right, for 2.5. And what that is saying is one contract would be times 100 shares. So it would be 1 times 2.5. So $2.50 will equal $250. Well, 100, right? Well, 100. So, well, it would be $250. Yeah, $250, right? So, all of this will equal $250. So, bam, I'm doing one contract. So, one contract times 100 shares. And remember, I'm buying near the ask. So, 2.5, right? Then I would press review. And the reason I do buy near the ask because you want to get your contract executed quicker. So I'm essentially trying to convince someone, unknown person across the market, to execute my contract by buying near the ask because the asking price. So bam, I would swipe up, but I'm not going to do that. That's how you finalize your option trade. So let's just say I want to do a put on Roku. Bam. So now, let's just say I'm bearish on Roku. So I believe Roku will go down, right? So I would do a strike of, so I always do, when I'm doing a call, I do 1 or 2 spaces above. When I'm doing a put, I do 1 or 2 spaces below. So I'm going to do this, right? With the limit of 1.82, so that would be $182. But more than likely, I'm buying near the ask. So whenever you're buying, whether it's a put or a call, you're buying near the ask. Remember, I'm buying a put. So I will go right here, 1.82, and I'm buying, let's say, one contract. And I want to buy near the ask. So I would do 1.88 because you see that it's going to be the highest price on the spread. Hold on, let me go back. 1.88 is the highest price on the spread, and it'll be $188 because $1.88 times 100 is $188. So bam, that's how you buy a call or a put, right? So let's talk about how to sell one. So if I go up and I go up and I go to one that I'm in, I'm only up $10. 5 contracts on Eli Callaway. So I would go to trade and then I would go to sell. And then, so now it's the opposite on the spread. So now I want to, remember, your spread. So I would want to buy near the ask and sell near the bid price. The bid is the lowest on your spread. So now you're trying to convince them to sell your contract. So bam, I would do let's just say I want to sell all 5 of my contracts, right? So I would do 5, and then I would do 0.45 right here, right? So I wanted to sell 5 for, actually my fault, scratch that. I'm doing 0.35, so bam, 0.35 because I'm selling. Forgot about that. We're selling our shares, our contracts. So I would do 0.35. Bam. So I would profit maybe $5 off this. So I'm going to hold this a little longer. But that's how you sell your positions on Robinhood. So this is how you trade, day trade, and scalp on Tastyworks. So first thing first, we're going to make sure our filter is selected to table, always, to make it fairly identical to Robinhood. And then let's just say I was bullish on SPY, right? And I wanted to, remember, when I'm day trading, I'm trying to get quick profit. So I don't want long expiration dates. I want a quick expiration date. So I would do 2 days to 4 days out, right? So I would do 2 days, and I would make sure it's selected to buy a call or a put. You can do call or a put. And remember, when you're buying a call or a put, you're always buying near the ask and selling near the bid. So bam. So, because the market isn't open, there isn't much we can do. But remember, so we want to buy near the ask. So the ask could be up here. And remember, calls are right here and puts are right here. So we're doing calls. So this is set up a little bit differently than Robinhood. So for a call, I'm buying near the ask price. Bam, right? And I'm buying one contract from 2 days out, pretty much. So I would select that 0.88, and then you can always change things. You can change the number of contracts you want. But I'm gonna do one. You can change the expiration date you want. So February 27th, because it's 25th right now. And then you can do whether I want to stick to being a call. And you can change your spread price right here. But usually the good news is they have it pre-selected to the ask price. So Tastyworks automatically puts it to the ask price. So that's a good thing because it makes you get in and out of trades quicker. Bam, I'll go review and send, and then it'll tell me my max loss, and it'll tell me all that pretty much. And yeah, and then you'll send order, and that is how you place an option trade on Tastyworks. So now let's go over swing trading and how it is formatted within my group. So I already showed you guys how to option trade. I showed you how to pick your strike. I showed you how to buy near the bid and the ask. I showed you how to buy a call or a put. So now we're swing trading. So my swing trades are primarily located in Aristotle swing trades. Touche. So in this example, I did a swing on Microsoft, call swing, strike 108, expiration March 1st. We executed this last Wednesday. And then I show you guys why I swung it, and I pretty much give you the rundown every time. I don't just leave you guys dry. I tell you what to buy and I tell you why to buy it. So, bam, let's get into scalp trading strategies, which is holding a stock for a short period of time to get quick profits. So, bam, my scalps are primarily located in Aristotle scalps. So, I got in a SPY call, and I usually only scalp from breaks of resistance or gap fills. So, I would say something like, I got in a SPY call, expiration 215, which are probably an expiration date that was pretty close out. Scalp to R2. So I always use pivot points for my targets during scalps. And if you don't know what pivot points are, I suggest you refer to my last video where I talk about my day trading strategies. So, bam, and then I'll tell you when to take profits, and I'll tell you if the target hit. Then I'll even show you my profits. So, you get the whole rundown when it comes to scalping. And then we have our day trading. So, we're holding and we're trying to ride the trend throughout the day. So I'll say something like, I'm in a SPY day trade, expiration February 22nd. Here's my target when I plan to take profits. And, I sometimes use pivot points for my day trading targets. And, I tell people to take profits along the way and re-enter. So when I'm day trading, I'm using Tastyworks. And, I'm using the quick in and out buy and puts, and they always have it pre-selected for you on Tastyworks. So it's pretty easy to, maintain. And, yeah. And remember, I show you the money I make. I show you everything. And, that concludes our lesson. I hope you guys learned a lot. Let me know what you guys think.